What's up everyone, it's Scotty with MoneyVest. So in this video, I wanted to break down everything Jerome Powell said in a 1 hour, 8-minute interview with Kai Rizdel. And this was at the Federal Reserve Bank of San Francisco. I honestly believe that I think every investor should go watch that interview because it was actually quite interesting and entertaining. It was actually very entertaining. I've never seen Jerome Powell actually laugh this much during an interview, because there was a couple times where he was absolutely cracking with the questions, and it was very casual. I would say it was not as formal as what we are used to seeing during the FOMC press conferences or testimonies in front of Congress. This was quite indeed very well done interview, and this happened today. So this happened just a few hours ago. Remarks from Chairman Jerome Powell at the Macroeconomics and Monetary Policy Conference. So I'm going to break down everything that was discussed from an interview standpoint. This is a super long 1 hour and 10-minute video, which I'm going to try to dissect down to under 10 minutes. I'll try my best so that you have an idea on what was discussed. And there was all conversations. All topics from interest rates, economic growth, inflation, labor market, political views, fiscal policy. Everything was discussed in this interview. So I highly recommend that you go check that out. Now, inflation numbers did come out today. So personal income and of course PCE, personal consumption expenditure. We came in a little bit softer on some things and a little bit hotter on others. So personal consumption expenditure, PCE month over month came in at 0.8%. And then, of course, we got index coming in at 0.3%, slightly lower than the consensus expectations, and 2.5% for a year-over-year basis, 0.3% month over month, in line with those consensus here, and 2.8% for the year-over-year core inflation, which is the Fed's preferred measure of inflation, coming in line with those expectations as well. So let's dive right into it. And starting with the PCE numbers, Jerome Powell says that this morning the numbers were, again, in line with our expectations. Core PCE sitting at 2.8% year over year and headline sitting at 2.5%. It's good to see that something coming in line with expectations. He did say something quite interesting about rates in the future, which I'll go over later in the video, but that was really kind of like the key biggest takeaway on what Jerome Powell just dropped the bomb on interest rates for the long term, if inflation, of course, is going to be somewhat with a bumpy road. Now, he said that over the course of the second half of 2023, we got some very good data on inflation. Then in January of 2024, we got somewhat higher reads on inflation, and we don't see us to be likely reducing rates until all of us at the FOMC feel confident that inflation is indeed moving down to 2% on a more consistent basis. And that's just more good data that we're looking for. We're making progress. He said that we are not overreacting to any of the good data that we've been getting. And the decisions of reducing rates is a very important one and a big one, because that's a pretty significant pivot. And that's going to be a start of quantitative easing, as I've already mentioned, that if they are looking at reducing rates, they need to get this right? So there's two sides to this, because if you reduce rates too soon, and this is straight from Jerome Powell, he said that if you reduce rates too soon, inflation could pop back higher, and we'd have to step back in, and that would not be a good thing for the economy and could be very disruptive as well. And that's exactly what I mentioned, right? The risk of cutting too soon is more than the risk of cutting too late. And that's exactly what Jerome Powell addressed in this interview. He said, again, if we cut rates too soon, inflation could pop back higher, and we'd have to step back in to increase rates to, again, bring inflation back down, and that's going to be very disruptive. On the other hand, he said that if you wait too long, in that case, that would be an unnecessary damage to the economy and the labor market, but the latter is much easier to handle than the former. That's not what he said, but that's really what he was implying by kind of understanding and kind of explaining the balance of risks with respect to doing too early or doing too late. He said that we always have to be humble, and the outlook is always going to be more uncertain than what most people think or what economists believe it to be. And labor market is strong right now. Growth is very strong right now, so we can be firm with rates for now. We can wait. We can be more confident or become more confident. We are in no rush. So they basically said we kind of are the firm hand in the economy, that we don't need to, be a lot more shaky. We don't have to make a lot of decisions. We can just chill. We can just sit back and just wait to become more confident, and then we can start reducing rates if need be. He also mentioned there's plenty of critics of the Fed. Bottom line is that we need to be more confident before we start reducing rates. And right now, we believe that monetary policy is well positioned to react to various different scenarios, meaning that whatever is about to happen, the monetary policy is in a very good position to react to all those different things that could happen. If we get into a recession, monetary policy is in a good position to react to that. If inflation stays where it is or starts reaccelerating back higher, again, we're in a good position to react to those types of scenarios. He also mentioned that you don't just want to be positioned for the base case, but for all potential scenarios, and we are in that position to react. And the main focus right now is about just getting it right? We look at market expectations, he said, we look at markets' reactions, and we are in a position to handle whatever case comes, and monetary policy works with a little bit of a lag as well. Powell talks to everyone in the committee. He's also very passionate about the mission, the dual mandate that's been set forth by the Congress over on monetary policy. And he said that prior to every FOMC meeting, he's got scheduled calls with every member of the FOMC. And the more people feel heard, feel listened to, that's really what's kind of separating this FOMC, this Federal Reserve, by the predecessors, by the previous ones. And he mentioned that talking to them prior to the meeting and to get an idea of their views and on the monetary policy and the decision-making process as well. He also did mention, because there were a few questions about 2024 being a political year, and of course whether the Federal Reserve is going to get politicized or if there's going to be any type of pressure during the elections. Of course, he says that we make decisions independently without any political pressure or election calendars or any type of essentially any type of pressure from any of the parties that may be in office. And economic forecasters have much to be humble about, right? So because they're not always correct. And he also mentioned that they are surprised, so FOMC and himself, Jerome Powell, it's been very surprising how strong the U.S. economy has been and how strong the labor market is and how it continues to be super, super tight. So this right here is the piece, which is, in my opinion, one of the most important pieces in the entire speeches. And he says that we expect for inflation to move down to 2%. That's what the base case expectations are, but the path is bumpy. And he says that the progress on inflation is going to, it's going to be bumpy. And if it starts to slow down for more than 2 months, so if it starts to slow down for more than 2 months, we will have to wait for the data to tell us that. And our position is that we don't know, and we will tell you what we will do if inflation does come down, right? So they've told us that, okay, if inflation does come down, we will tell you what we're planning to do. But if that doesn't happen, and if you get just 2 months of inflation data that is suggesting that it's coming hotter than what the expectations are, and if it's a little bit somewhat elevated, somewhat stagnating sideways, then our policy rate will be different. And that means we can hold rates where they are for longer, and that's if inflation doesn't come down. So I think this paragraph alone kind of mentions that nobody really knows at the end of the day whether rates are going higher or lower, and there is a possibility that rates do not get cut in 2024. They stay where they are, or worst case scenario, we see a hike in 2024 if inflation does not come down, right? Inflation, of course, holds the key to all our answers, all our questions, I should say. We don't know where rates will be, or whether they're going to go back to the pandemic lows. Jerome Powell says that he doesn't think that rates are going to go back to the pandemic lows. And of course, monetary policy has the dual mandate. They've got two mandates to focus on. But right now, they're focusing on inflation because that mandate is far from their goal, right? So Jerome Powell explained that between employment and inflation, if one of those mandates is far from its goal, that's what we focus on. And as inflations continue to come down, which is a good thing, right? So as it's coming down, now the balance of risks is stabilized, and now we are thinking about both unemployment and inflation, because now we can start to actually focus on unemployment as well, as inflation is now coming down to its 2% target. Again, he reiterates economy strong, labor market is in good place, and we have made progress on inflation. We want to focus on continued progress on this very same thing and want to focus on keeping this exactly the same while also having progress on inflation. When asked about a recession, he says that there's always an unconditional possibility of a recession in the next 12 months. And I don't think there's a possibility of a recession right now. I don't believe that we are at the edge of a recession. So he said no to a recession. And then finally, he said that credibility for the monetary policy, and of course sticking to their goals and the dual mandates that they've been set forth is important. We won't be the Fed that gets politicized even during an election year. And finally, he said the things that really matter over the long term for the US economy is not the decisions of the Fed, which is also quite interesting, which is also what he said, is that what the Federal Reserve does at the end of the day is not what matters when it comes to the U.S. economic growth here. What matters is, of course, the technology, the well-being, the productivity, the jobs market, the individuals, and how they're doing. That is what really matters. Jerome Powell and the Federal Reserve, what they're doing with interest rates does not matter. For the economy, that does not matter. So that right there was the entire interview, kind of summarize all the important pieces, but I still definitely recommend everyone to go out there and watch that video, watch that 1 hour and 10-minute interview, because I think that's going to be super helpful. Very, very casual, very interesting and entertaining here. But let me know your thoughts down in the comment section below. I think a lot of the things that he's already reiterated, inflation is still going to be one of the most important indicators and reports to watch out for, because that's really what's going to dictate how the Federal Reserve kind of plays monetary policy and interest rates moving forward. But the key here is to really understand that if inflation is above the Fed's target, and if it's not coming down, if in fact in the last, let's say, the next 2 to 3 months, it's showing signs of reaccelerating back higher, then I think rate cuts are going to be completely off the table that we have to be prepared for. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. Let me know in the comment section down below. What do you think about Jerome Powell and the Fed and the speech from Jerome Powell? As always, happy investing. I'll see you all in the next video.